All right, we can do this, and we can do this laughing. Hello, everybody, and welcome to this episode of Mastering Midlife: How to Thrive When the World Asks the Most of You. I am sitting here with my friend, colleague, and mentor, Gordon Bernhardt. Gordon is the CEO of Bernhardt Wealth Management. He also has a wonderful series of books called Profiles in Success, where he interviews some of the most successful, interesting people in the Washington, D.C. metro area. I am one of the people who was fortunate enough to be profile there. I'll put that in the show notes so you can go explore that vast library of incredible people. But right now, we're going to talk to Gordon about what he knows best, which is, besides people, it's wealth management, investment, and how to take care of your financial well-being. Gordon, thank you for being on the show.
You're welcome. Thanks for having me. And don't forget to share the link to your interview.
I will share the link to my interview. I'm narcissistic enough that I want people to know all about me. So Gordon and I have been having a really good time here talking about some adventures that he had, and that's on another podcast. But today, what I'm really interested in is, the demographic of my audience is generally people in their, late 30s, 40s, 50s, maybe even 60s, but people who have kids who are going to be going to college or in college, and then elderly parents that they take care of. They may be divorced or they may not be. But they're all being squeezed from one direction to the next. So they're not thinking about everything that they should be thinking about for their financial health. I know I'm not. When people come into your office, what are they missing? What do you want them to know that they may not be thinking about?
Well, take a step back first, because you're right, because most of us don't really think. If you and I go back to when we were coming out of college, as a 20-year-old, all the mistakes that I made that I wished that I had guidance. Certainly, so I'll say this, so for that demographic with kids, certainly we want them to be on the right path. So hopefully some of the things we'll share will get them to start saving earlier, planning earlier. But so one of the things we'll certainly, when somebody comes in, first thing is, of course, we always talk about the goals and objectives. So it's important to make sure that anybody they're working with should understand what's really important to them. What do they want to accomplish? Who are the important people in their life? Where do they want to live? What are are their parents still alive, and what's their condition like? Because there is talking about that sandwich generation. What about the things that the parents are going to have to be involved with? To get help those grandparents, to help their kids. So we want to make sure that we understand what is important for everything that they're addressing in life. So, but for the most part, when you think about that demographic, there's probably 5 key things that need to be addressed. And depending on their goals and objectives, we're going to try to find those things. One of those things certainly is just the money that they've accumulated. What are they doing with that money? Is it working as effectively as it could be? Whether it's money in their 401k plan with their employer, and maybe they've left money in old 401k plans, the IRAs, the Roth IRAs, the general investment accounts.
So what's the problem with just going like, oh yeah, my money's in a 401k for my company somewhere?
And that's fine, but again, is it properly allocated? When you look at the choices, have they only picked the 5-star funds, and those 5-star funds are all large cap growth funds, so they aren't necessarily globally diversified. So we want to look at the portfolio. So we'll ask them to bring in statements and understand where they are, how they're allocated. And again, if they have old 401k plans that they haven't consolidated, they should consider, they can either move that into an IRA or.
And if they're with past companies, they're allocated the way you allocated them in 2005, and those that just doesn't cut it.
Hasn't changed. Yeah, they haven't changed. They haven't rebalanced it most likely. So their investments is clearly, we need to make sure that we understand that. So how should that be allocated based upon their goals, based upon their objectives? But then there's going to be different buckets. So obviously, if they've got kids that are college age or approaching college, we need to look at those assets a little bit separate, a little bit differently than the assets that they have set aside for retirement. So the investments is a big part of it, and most of the time, that's their number one priority. Most of the time, that they want to get that addressed. They're concerned: am I doing the right thing with my money? One of the second concerns that they should address is, again, wealth enhancement matters, which just means, are there things that I can do to mitigate taxes today? We've had tax reform last year, but again, there's things that we couldn't deduct, things that we could deduct before.
So what do you do that the CPA won't be doing?
Well, we don't replace the CPA. Their CPA
right. So the CPO has a specific role. What is it that your role in
our role is really just to make sure that we're all on the same page. So
Okay.
when we're working with any other professionals, we want to make sure that there's that line of communication that's open so that everything we're doing is consistent with what they're doing so that we can, again, do, again, we're all a fine-tuned orchestra, basically. So the taxes, tax minimization is important. Protection issues, clearly at this point too, is again, if the kids are approaching college, what are the things we need to do from a standpoint of asset protection? And that doesn't just mean, life insurance can be important, but it could be disability insurance, what their auto and home insurance, an umbrella coverage. Yeah, umbrella is one of the easiest things that many people don't overlook, but yet it could be devastating.
What is an umbrella?
Umbrella policy is take whoever their auto and home is with. An umbrella policy gives them an additional layer of coverage. So in this litigious society that we live in, can you imagine having a car accident and maybe somebody trying to sue you because now all of a sudden their neck is hurting? So that gives you coverage over and above what your auto and home would cover if in that auto accident or they slipped on your sidewalk walking up, things like that. So it's important to address all of those insurance matters to make sure that, again, that the kids, the spouse, everything's going to be protected if something does happen to anybody in the family. Another thing, obviously, then is just is to help basically look at charitable planning matters. Again, if charitable planning is important, to make sure that what's the best way to make a gift to their church, to a cause that's important to them. And then the fifth area is basically how to transfer assets in the best way. So again, in this demographic, it's not uncommon for a couple, even if they have 18-year-old kids, they might have a will, probably not a trust maybe at this point, but they might have an old will. Some people don't even have that will from even when the time their kids were young. So they need to make sure that their estate planning documents are current and up to date, and that if something did happen again, that again, the assets would flow in the way that they want them to.
So here again, you work with the estate attorneys.
Yes.
To help make sure that everything is taken care of.
Yep. So it's important for a wealth manager to understand all of those areas. What we'll then do at that point typically is try to run a stress test, basically. Say, okay, here's the things you're doing. Again, what are the gaps in the coverage, that need to be identified? Again, that's the estate planning. If there's gaps in the estate planning plan, if there's better ways to make the charitable contributions, if the money needs to be allocated in a different way. Again, maybe they're being too aggressive. Maybe they're being too conservative. Maybe they aren't as globally diversified as they should be. We want to make sure that we'll run this stress test then to make sure that, again, that to try to get the assets, to try to get the estate all positioned properly so that, again, these goals that we've previously discussed with them, that they have a higher probability of then reaching those goals.
So how do you make a decision? Because for me, trust is, I have very little trust in professionals in this realm. And when I talk about you all the time to people, because I have such deep trust for you. I'm like, if I send them to Gordon and his team, they'll be fine. What do people need to look for when they're looking for wealth managers?
Trust. I agree. Trust is important in any relationship that we have.
But how do you know to trust someone?
That's a tough thing, because I think I have this love-hate relationship with the financial services industry. It's an industry that, for the most part, does not incentivize professionals to act in the best interest of the clients. Now, that doesn't mean people are bad people. When I worked for two different companies and I had a broker's license, I tried to do the best job I could, but I was still limited to what I could do. So I think the one thing that they should begin looking for is to make sure the person is a true fiduciary, a registered investment advisor only that doesn't have a broker's license. So a firm like us, for example, we can't get a commission. If we recommend a stock from a company, a mutual fund from a company, we don't get a commission. We don't get trips. We don't get anything from any company.
So this was in the news recently. So can you explain a little bit more what it means to be fiduciary?
A fiduciary is a registered investment advisor, because you're right, the SEC, the Department of Labor was trying to push through a fiduciary standard for all people in the financial services industry. That was pulled back by the Trump administration, right or wrong, but there was that push to try to get advisors in the retirement plan space, to always act in a fiduciary, whether I'm at Merrill Lynch, a firm like mine, or whatever. So the fiduciary just means you always have to act in the client's best interest. So that was pulled away. So if I'm a broker and have a broker's license, my obligation is to recommend a suitable investment. Now, again, these people are not necessarily bad people, but they have limitations perhaps on what the company can, allows them to offer. Whereas again, a registered investment advisory firm like us, that's solely registered, we don't have a broker's license. So we legally always have to act by a fiduciary. So from that perspective, when that Department of Labor was trying to push that through, it really didn't impact me because we were already acting as a fiduciary. We had that legal liability to do that. Now, again, so it doesn't mean people are bad.
So what's the specific question to ask?
So there's actually several questions. One is to understand how they're compensated. You want to ask about, again, those types of commissions, the hidden commissions. And unfortunately, sometimes the disclosure forms that firms have to provide, sometimes they're just the gobbledygook that's in them, the legalese. It's very unclear. But we actually give people a 10 question questionnaire, the fiduciary questionnaire. And if they ask those 10 questions of everybody, it would be very clear whether an advisor was a fiduciary or not.
So when people come to you, what are the common goals that people are looking for?
Yeah, that's a good question, Mark. And again, given the demographic of your audience, most people, again, college planning is important. So we want to talk to them about the 529 plans if they've got them.
I want to put a plug in for that. My ex-wife and I, to her credit, forced us. We paid for college in the year 2000. My kids are in college now, and we paid the year 2000 tuition. That was a brilliant thing.
Yeah.
Go 529s.
They are an incredible gift to have that to have that growth and to have it ultimately be tax free. And there's multiple kinds. There's the prepaid tuition types of plans, and there's the investment types of plans. And even in the investment types of plans, it's important. There are some 529 plans where a broker can get a commission, and then there's the no load 529 plan. So there's a lot of options. We typically try to recommend the choices that don't have commissions because obviously we can't earn a commission. So, but the 529s are great plans for grandparents to put money into, that for parents to utilize. So you'll look at the 529 plans for the college age kids, start making sure that they're invested appropriately based upon the kids' ages as they get closer and closer to their college years. Retirement is obviously going to be important. And they may say the college, if I got college age kids, that may be a higher priority, but we still want them to, again, maximize, their retirement savings as much as they can.
Which is more important, college education or your own retirement?
Again, everybody's going to be different because again, our goal is to understand the heart and soul of an individual. So we want to understand the balance because again, there may be always ways to kind of finance some college, but your retirement, there's not much if you don't get your ducks in a row for retirement, that can push things off way in the future. So we'd still probably try to encourage them to again, maximize retirement and maybe try to find other ways to do some things here. But again, we'll always come down to what's their number one priority. If they have to give up, something, what's going to be more and more important. So those are probably the two most common goals, college and retirement. But then those other things, like we talked about earlier, just about making sure that they've got their estate planning documents updated, life insurance, and all the protection issues addressed, also vitally important. Because it always breaks my heart when someone comes to us, lost a loved ones, and they had inadequate insurance. So we certainly don't want to see that with any of our clients.
So if you're of moderate means, not particularly wealthy, you could be, but mostly middle class, what professionals should you have in your life? We mentioned a CPA, so a good accountant, a wealth manager, and who else do you need to be part of your team for financial stability?
So again, everybody needs, their auto and home insurance agent, so they need that person. Again, their life and disability insurance.
So a wealth manager is not that. So you need your insurance agent?
Keep in mind, some wealth managers will say they will sell insurance. But then you have to question whether they're a fiduciary. or not, because again, most of those insurance programs have commissions involved.
That's where I
And,
get confused.
and
That's
I
where you get
never want, and
confused.
I never want to be enticed to sell something on the basis of a commission. Last thing you want to do, last thing you want to do is talk to if you're dealing with a broker, for example, don't talk to your broker in December, because if they can perhaps sell a little bit more, that might jump their commission level for the entire year up. So you don't want to be that person that sold something,
Right.
inappropriately. And I don't want to have insurance sold. Now we'll work with our clients that have their insurance agents. We'll refer other people that we trust, because again, we don't sell it. Again, so we don't get compensated on those matters. But certainly insurance is important. The CPA is important. Clearly the attorney is important.
So the attorney being the estate planning attorney.
Yep.
So that you have your ducks in a row, trusts, wills, and,
Yep.
and where assets are going to go.
Yes. And then, again, their advisor, whether it's a fee-only advisor like us, and again, I'm not going to, there's good people in all the firms out there. But I still, again, if I had a loved one, if I had a family member looking for an advisor and it wasn't going to be me, I'd want them to find a fee-only firm like us that invested like we invest, that addresses all these issues like we address.
I've just by being on your mailing list, I really encourage you to go to Bernhardt Wealth Management website, because just by being on your mailing list, I have learned more about financial well-being, my health. You do so much for your community of people. It's incredible. So I'm really appreciative.
Thanks,
Is there anything I forgot to ask?
That's a good question. You should have warned me with that question. Is there anything you forgot to ask? Well, I probably just maybe touch base. I'll maybe say here that from a standpoint of the investment, I'm very passionate about our investment style too.
So tell me about your investment style. What's different about you guys than most people?
Is that Morningstar did a study once and basically said, what's more important in determining the performance of a fund? And they said, is it their star rating, or is it the expense ratio? And basically what they came back on saying, the star rating is, it's okay, but bottom line is if you have two funds that are identical, let's take again, two large cap growth funds or two small cap value funds, whatever that is. If a person's looking at their 401k plan, don't look at how they performed last year and pick the one that performed the best. Look at the expense ratios and pick the ones with the low expense ratios. Keep in mind that a small cap fund is going to have a bigger expense ratio than a large cap. But if you compare the large cap growth, the small cap growth, the small cap value, the international, the emerging markets, the bond funds, once you've identified them and grouped them together, then pick those out of those funds that are available, pick the ones with the lower cost. And you have a higher probability then that fund will do better over the long term.
So if you went numb the way I did in your car, that's why you have a wealth manager, because that just went over my head. And I am really appreciative to have a friend and a colleague who is as well versed in that.
Well, thanks.
I've always said I was a really great sales guy, not a great businessman. I am an incredible executive coach and writer.
Yes.
I am not a great entrepreneur. So that's why I need professionals in my life to help me in the places where I am not an expert.
We all do, so, advisors should have advisors. I think that's, again, another lesson from the Camino is the relationships that we have is to make sure that we have those people in our lives. We all need people to give us the advice, because no matter how smart I am on my own, on your affairs, it's easier for me to be unemotional about our clients, money manner. So when the markets are volatile, I know we don't react emotionally to how the market is, but and I tend to think I'm not emotional with my own money, but people still, when it comes to their own things, sometimes we don't think through things like we should, but we will do it for the ones we serve.
Sure.
So we all need advisors. We all need help.
Very cool. Well, thank you. And by the way, that was a good reminder. Go find the episode where Gordon talks about his trip on the Camino de Santiago. Really incredible episode and very heartfelt. Gordon, thank you again for coming and sharing your wisdom.
Thank you, Mark.
To everybody else, if your head is swimming, go to the website, Bernhardt Wealth Management. And thank you for your most precious commodity, your time and your attention. I love you. Having a great rest of the day.